We now proceed for our first panel discussion, which will focus on identifying promising markets for capitalization within India. We have Mr. Amit Nayak, Vice President and Executive Board Member, Hospitality Asset Managers Association, Middle East and Africa, as the moderator. With over 2 decades of industry expert, Mr. Nayak is a key figure in asset management, hospitality, and strategic advisory. He currently serves as an advisor to the UAE Ministry of Economy and UAE Tourism Council, supporting initiatives that enhance national economic growth and global competitiveness. Joining him on stage are Mr. Arun Saraf, Chairman and Managing Director, Juniper Hotels, Mr. Mohit Arora, Managing Director, Real Estate Group, Blackstone, Ms. Priya Paul, Chairperson, Apeejay Surrendra Park Hotels, and Mr. Viren Jairath, Managing Director, Equity Capital Markets, Kotak Investment Banking. Please join me in giving them a warm welcome.
Yeah, sorry.
ये अपने आप चल जाएगा ना ऊपर ऑन है ना
Other super cities are at around 150, 200,000. And that's a city, not a country. The development pipeline is currently almost 700 hotels, which is roughly around 90,000 keys. But the market capitalization in the last 10 years, and I think this is for our bankers and as the panel goes, has grown 12x from 20,000 crores to almost 2.5 lakh crores. This also puts into perspective what I enjoy the most is transaction volumes, because I think that defines how the capital markets move and the investments come in, which is almost touching 3,000 crores in 24 alone, so which is fantastic. That means there is a lot of growth happening. And the fund trajectory currently from the business itself is roughly around 24 billion, which is moving up to 30 plus billion by 29. That is fantastic from a growth pipeline, but that also then comes back to how do we think about our business? Where's the money coming from? And I think that is what all of us were asking our two friends on the other side, is that where are we going to get the money from, yeah? I think let me just put it out to all of you. As we look at the last 2 decades of capital flow into India, how do investors feel about hospitality compared to other real estate verticals? And a follow-up on that, given Manav's theme of past, present, and what's going to happen in the future, how do you look at the investment landscape in India over the next 20 years? So just kind of a holistic perspective on that. I think, Priya?
Cold calling me. So I think 20 years, I mean, it's history now. But as many of you know, we accessed did an IPO last year. But that journey to that IPO started in 2007. So we were looking at it in that last boom time in 2006-07 that happened. And finally, we were able to, an IPO last year, which was 63 times approximately oversubscribed and was very good. And has helped us to, therefore, just free our balance sheet and then use capital for our growth plans. And I think seeing us, there were many IPOs that started last year, and I think now the hospitality industry is seen as an asset class for where people want to invest, not just HNIs, but also banking. There's a far more understanding of the hospitality as a industry, and I see a lot more people following it, and there's more traction. So I think there's going to be a lot more money coming into the business.
100%. And
like as an investor, I would just say, when you talk about real estate, right, as an investor, when I'm looking at it, I think hospitality is right at the top. Because when you're looking at India, you're essentially looking at growth, right? And hospitality or the hotels as an asset is essentially something that gets repriced overnight. You're essentially selling a room every night, right? And as the growth happens, you can actually keep repricing it and compare this to something like an office building or a warehouse or a data center where you enter long-term leases, right? So you'll always have that MTM potential, which looks on the graph, but you're not able to realize because you're locked in. This is the only asset class where you don't get locked in. If you achieve those rates, there is high operating leverage. So owning the right asset in the right market gives you the kind of growth that typically investors come into India for.
And maybe the last part, I think what's important to see is also when you look at the history of capital markets, the listings that you've seen in the last 1 or 2 years, almost 3 to 4 hospitality IPOs versus what was there for a decade prior to that, shows that this asset class is now becoming more and more interested towards investors, both FI and domestic mutual funds. So I think as we go ahead, like Mohit mentioned, it's a proxy on growth, it's a proxy on tourism. So a lot of those aspects on hospitality, I think that interest will continue.
Arun, your perspective?
Sure. You see, the hospitality sector in India historically was very, very confusing. So there was an ownership side of it, there was a management side of it, all were clubbed together. So there was there was no pure play in hospitality. And it was like hospitality was like include all. If somebody had a restaurant or a hotel or a management company, everything became one. Now we have the market segmentation. So you have the operating companies, you have the management companies, and the investors have choice. So international investors, I see that India is now maturing in the options that an investor has it, and the transparency that has come in. So you will see a lot more interest actually, and this is an industry that is so underserviced in India. Growth is superb. I mean, this is unlimited almost. That's
So I think on that note, we should tell Ritesh to IPO very soon.
absolutely. We're all waiting for it.
Now, I think Viren, with all the fun, the global markets are happening, and I think it's just still, I don't know where and when it's going to kind of plateau out. Tell us our business. So I think one of the comments that happened in the previous panels was that the Indian hospitality stock market is the only one from a pricing index has still maintained some level of stability. How are investors from a Kotak point of view, would they recalibrate and look at more hospitality investments? And as well as, do you see the appeal for the sector growing more and more? And is that something that you're advising your clients?
Sure. No, of course, there is a complete dislocation in the markets currently. There's no doubt about that. But if you look at all the, real estate, hospitality, I think they were some of the biggest beneficiary of inflows last year. If you just look at all the hospitality stocks last year on a calendar basis, 2024, they'd be up anywhere around 35-40%. And the correction, in fact, more importantly, in this year would be mid to low teens. So clearly there is a lot of support still, but I would want to distinguish between, I think even within the hospitality sector, I think the large caps, mid caps and small caps, because unfortunately what has happened with the continuous selling of almost 6 months now by FIIs, except for the second half of March, what they have done is that there has been a lot of consolidation from small mid caps to large cap across the board, across sectors, including hospitality. So if you see the ones, say, around $1 billion market cap, lesser, slightly more, they would have had a bigger impact on the outflows and hence a correction on the stock price versus the mid to large caps. And again, that's been more fundamental based across all the sectors or subsectors in India. So, but again, to your point, yes, I think as we move ahead, the dislocation in the market clearly is something that we want to kind of see some revival, but with macro statements coming out pretty much on a daily or every second or third day, it is having an impact on stocks, this thing. FIIs by themselves, if you look at it, besides one mega cap stock here, I think they have been very focused on taking bets on a single stock. So very importantly, like if you look at some of the big 6-7 names who are invested in India, they have actually picked out one amongst the 10-12 listed stocks. So they'll pick up one and then build position in that, while the local mutual funds are more broad-based. So they want to then invest across, 3 or 4 or 5 assets or companies rather within hospitality. So I think that's the way the differentiation is.
Mohit, on that, so Blackstone being one of the firms, and you guys are the guys who kind of did the first foray into hospitality with the acquisition of Hilton and everything else that went with it. Are you looking at any ring fencing strategies with regards to REITs, debt covenants, or going on an asset-light strategy with regards to hospitality? Or are we insulated from all of this?
I think if you look at medium to long term, I think the underlying fundamentals which are driving this growth, they remain intact, right? So if you fundamentally look at demand supply today, you're probably growing the room nights at double digit CAGRs vis-a-vis supply is down to 6-8%. So some of those fundamentals will ensure that the industry remains insulated from these short-term bumps, if I have to call it, right? From a right capital structure perspective for a hotel asset, I would say it depends on the particular asset, on the market, where the economic conditions today are. I would say now, having done 3 of the 4 REITs, I don't think, at least for the REITs in India, hospitality is the right product, because when you talk about REITs, essentially the focus is what is the day zero yield, and that yield gets compared to like G-Secs, it gets compared to what you are getting in an FD for an HNI or UHNI. Compare this to an hotel investment where your going in yields might be lower, but there's a lot more growth because again, you're repricing the asset, the fundamental tailwinds. So total return perspective, this might outperform some of the REITs, but going in yields would be much lower than what a typical REIT investor will look at it. Because they typically come with the debt mandate in their mind, where trying to focus on initial yields and not so much on the total return.
If I may just follow up on this. So what you're saying is that with regards to hospitality REITs, would it be more interesting to look at a mixed family REIT?
Yes, or do a C Corp or a corporate IPO, right? Where people, when they invest with the mindset of an equity, right? So you have, like, you solve for a total return and you solve for reinvestment of capital, because these hotels need capital. You can develop grounds up given the shallowness of the market, right? So those are the opportunities which eventually over time, if you keep putting in more capital and keep doing the right ROCs, that will eventually lead to good CAGRs in terms of our investment amounts.
Thank you. I think Priya and Arun, so I have a soft corner for Priya and her hotels because I got married in one of them in Chennai. And the one thing what you see with hospitality as an asset class is very cyclical. Mm-hmm. And, the likes of Kotak and Blackstone, you do a lot of safety nets, you do a lot of modeling and everything else. But you guys are the ones who are actually owning and operating hotels. Are you seeing post-COVID there is anything that makes our asset class more resilient? Anything that you guys have done in your operating models?
So, I mean, we do a variety of hotels, from kind of lifestyle hotels in the 4-star space, as well as the luxury hotels. And I think it's actually looking at your experiences and your offerings and to appeal to a new generation of travelers. So I think the way we travel, how we travel, and why we travel has really changed. And that's something that I think we have to keep on being agile to respond to. So I think that's the only way to keep your model resilient.
Arun?
See, the cyclicality of the hotel industry actually was not dependent on demand. It was more on supply. The supply was coming in bursts. So when there was a huge amount of supply coming in the market, the rates would be and occupancies would be affected. Now I see that the demand in India has become very, very deep. So it's not really something that is, and it has been become much more wider. So earlier it was purposeful driven, like business travel. Now there is a leisure travel, there is business travel, there are all sorts of travel. There is MICE travel, there is wedding and celebration travel. So you have a very, very wide spectrum of demand generators. And you see that the cyclicality in this industry is not going to be as pronounced as it used to be. It's going to be much more flatter, and there will be spurts in demand and supply, and that will impact it. But I do not see that this is going to be a very, very deep concern.
And I think to add to that, and exactly to what Priya said, the frequency of travel has also changed.
Completely changed, yeah.
Earlier, I think when I was growing up, it was once or twice a month, maybe. Now it's once or twice a week, and sometimes more. And I think that aspect of it actually drives our business more and more and more.
Yeah, it is a consumption story in India.
100%. But one of the things is that when we do models, and I think these are to the two bankers there, when you're doing your models, when you're looking at brands and owners and the dual challenges, what happens in the market with regards to the macro headwinds, what's happening in the US and all, and the rising operation cost. One of the biggest challenges we face today is cost of labor, which we never had to worry about, even in India. We never had to worry about much, but today we have to worry about it here. Are there things that you guys are looking at it from an investment with regards to brands and operations when you're investing?
No, so you're saying cost of labor?
Now, we are looking at how do you look at the, from when you are investing into any of the hotel assets or even the stocks of Park Hotel or Juniper Hotel, how do you look at their P&Ls?
No, so you're right. I think, so first of all, I think on the previous point when you mentioned the frequency of travel as well, I think with a lot of that, the turmoil in the markets, I think what's important is how much people are willing to spend on their discretionary and travel now. So I think some of that may see an impact, maybe more short term, etc. I think more from your question on the balance sheet and P&L, I think what investors clearly want to see, I think more than even the P&L, this thing, of course, profitability is an important factor, but it's growth. Growth has become a single largest driver of both foreign as well as domestic investors when they look at asset classes and in hospitality or even some of the new age tech company, other IPOs that are coming to the market. You could be in fact profitable and show good profitability, but if the growth suffers, you will get punished in the market, especially for listed stocks. So it's a very strange phenomena where, and I think that kind of differentiates us a lot from a lot of the other, other countries where effectively, they know the kind of range bound growth that a lot of these companies will show. So I think growth continues to, and will, I think even as investors look in the near term, mid term, even long term, growth will be a bigger factor than profitability, which is equally important, but growth takes precedence over profitability.
Mohit, anything to add?
Yeah, no, I would agree with Viren. I think when you're looking at, and again, I think the private pool of capital can be very different from a public pool of capital. When you're looking at private pool of capital, we are clearly focused on the current P&L, right? But as I said, there are no long-term contracts, right? It's very easy to evaluate an office building or a warehouse or a data center where you have a long-term certainty of the cash flows and you're just discounting it. On the hotel, there is a lot more that goes into it. There's an operating leverage element. There's a demand supply element. There is like essentially you're selling the room night every day. So there could be a P&L which kind of reflects the health of the asset as of today, and there is a little bit of stabilization and growth that you can bring in. And that's where I think your subjectivity or your insights into the market helps. There's a current P&L, there's a current capital structure. Can you improve it? Can you go any further? And hence you kind of invest and solve for your opportunity cost of capital.
And that's what makes our business so much fun.
Yes, exactly, exactly.
I think to Priya and Arun, of late, if you look at brands like yours or even brands like Taj and everything else, you've got branded residences, lifestyle hotels, hybrid models and everything else coming in. Are these investor-driven innovations or these are just operational necessities based on the new audiences that we have to cater to?
Talk about your branded residence and I'll talk about mine.
Sure. Let me start. If I can rephrase the question. Actually, is there newer products in hospitality that are emerging? Besides a vanilla hotel, a hotel room, are there residences, branded residences? Are there, sharing opportunities? See, these opportunities are going to keep on evolving because the customer tastes are evolving and the people do not want to be tied up with one hotel or one residence in Goa, for example. So they would like to have many more opportunities. So this is going to be a field that is still in nascent stage in India. It's going to definitely grow, and this is going to be a new opportunity for many of us hoteliers to delve into. At present, I would still say that the opportunity in the organized, the vanilla room sector is immense. So I'm not trying to venture out into this, but this is definitely an opportunity.
I think, just to add, I think it really depends on the investment you have to make in that plot and the city location. So I think these hybrid things, whether it's a mixed use or branded residences, depends on the location. We are doing one in, say, Calcutta, which has residences as well as hotel. But not all sites and locations can support that. So I think it's a question of evolving the types and whether it's, you can do office with hotel, you can do something. It really depends on the site.
I think it's also reflective of the asset where we are now.
Yeah.
So it started as an apartment hotel, then the hotel, now business parks, and I don't know how much of plot is remaining.
I would just like to add here quickly. If you look at Grand Hyatt in Mumbai, which we built in about 25 years back, it was a mixed-use development. First of its kind, you had 550 rooms, 150 service apartments. We had a shopping plaza that has now been repurposed to the grand showroom that you saw yesterday. And then we had the convention facilities, which were the largest. So this was different segments. And this is an opportunity that will dictated by the location, the size of the plot, as Priya said, this is...
Business drivers, yeah.
I think also to the two bankers, our business and the way hotels are built is one of the few businesses which can translate and get transitioned very fast. So, you build, earlier we had hotels which had dedicated restaurants by the brands. Today you can lease them out, or you can convert a few open spaces into offices and so on and so forth. So there's a lot of aspect of it where the momentum can change very fast. The story of India, I think, has been beautiful in the last 10, 15 years. And one of the aspects of it is the geo-economic and the diplomacy of India has also changed a lot. And I was privileged yesterday to enjoy part of it as being part of the UAE delegation which came here with His Highness Sheikh Hamdan. Do you see these state-level engagements as a big catalyst to the cross-border capital flows that happen in India today? Are these things that you feel that this will change the flavor of the investment cycles in real estate, in hospitality, in infrastructure? Because infrastructure for hospitality is a big thing in India, and I think it's very well needed. You see cities like in Mumbai, where infrastructure is always growing. Are these things that you see as opportunities? Priya?
Yeah, no, I think extremely important when you have geopolitical risk, as we have now, and you have a very stable government that is projecting themselves as the fifth largest economy, soon to be the largest economy, the demographic dividend we have here. I think those are just really positives for people to bring capital into India, and also then to give positive, let's say, momentum to investors within India to invest in all the places. And as you've said, we're so underserved, and we're talking about the hospitality industry. I think the opportunities are tremendous. We do have issues, though.
Yeah, you do have issues, Priya?
Yeah, no, I think, I think clearly these cross-border political associations, these obviously gives a lot of confidence to the investors, because at the end of the day, you are raising capital in some of these markets, and the investors are very closely tracking how the political relationships between different countries exists as of that day. So any delegation coming from Middle East or from US or Europe, it definitely have a positive kind of a loop on the investors when they are considering about deploying capital, right? And outside of that, whatever the government is doing on ground in India is extremely, extremely positive in terms of the entire infrastructure development that's doing, in terms of the connectivity that's being established with tier 2, tier 3 cities, which is opening new avenues or new markets. Like if I look at my evaluation of hotels, a decade back, probably I would have never looked at a hotel investment in Varanasi or Ayodhya for that matter, right? Because there was just no connectivity, there was no focus, there was no a consumer-driven kind of a product. But today, these are the markets where I'm increasingly spending my time on, right? And a large part of this a change, you have to give it to the government. The way they have built the infrastructure, the way they have advertised or marketed these, and obviously the rising middle class, the urbanization, which is leading to opening up these new markets, and hence the new capital can come in to kind of capitalize on some of these opportunities.
So yesterday we had the opportunity to sit down with Mr. Piyush Goyal, and he's very eloquent and he's very passionate about it, and he was talking about becoming the third biggest economy, the Amrit Kal of India, and we have enjoyed it, I can say, from our side of town. We would have never thought of going to the Kumbh Mela.
Yeah, exactly.
And I know families and families and families who all flew out to go for the Kumbh Mela. And I think that was just amazing to see that, which you would have not thought 10 years back.
Correct.
It's something that you would do that. And I think what Ritesh also mentioned about, from our side of the business, everything was sold out and more. To the bankers, and also I think, Arun, if you can key in, yourself as well as your IPO'd also, ESG, how does that feel? What is the feeling of ESG here? Because we do a lot of deals in Europe. And in Europe, if you want financing, You need to have your ESG mandate right up front, otherwise you can't even talk to capital. What's happening here in India?
So I think ESG has become quite an important play. I mean, it's growing. I think we still have a lot of we still have a lot of runway to see that play out. But you have seen the shift, the trend that we have seen at least in a decade is more and more companies putting up corporate social responsibility on their websites, on their presentation, because there is a clear mandate from some of the Nordic European funds to start investing in ESG. While I'm not quite sure how much of that has started getting into hospitality, but you kind of started seeing this in some of the industrial sectors, some of the focused on energy. So that has started playing out, and it's been a while now, so especially since the last decade, etc. I think as more and more funds start focusing on ESG or having a mandate to have some portion of their capital, flow towards companies with ESG focus, with higher CSR, etc. I think we'll see that trend develop, and like I said right now, the continent that's kind of leading that fray is Europe.
Arun, Priya?
ESG is something which is going to stay, and it's good. I mean, it makes profit. I mean, it adds to the profit bottom line, and ESG is one area of yardstick for investment decisions by large investors. They are very, very environmentally conscious. Climate change is something which is real. And this has started in the West, where it has become mandatory for any company seeking investment from large funds. You have to have a qualification on that. And the CSR, that social responsibility that we talk about, also dovetails with it. So this is something, and if you look at the youth and the younger generation, they are all conscious about it. And I do not see that this is as a kind of a pain or a drag on our growth. I think it's going to be very supportive. The companies which become conscious of it, sooner the better. I see all the international brands are very conscious. Our Indian local brands are conscious. So this is something that's going to be actually good for humankind.
I just had to add. So ESG in an older avatar has been part of our vision and mission statement for 30 years. And I think since we started doing new hotels, LEED certification, zero waste, being carbon neutral, are all part of our strategy currently, and different milestones, 2027, 2029, 2030. Let's see what happens now with carbon, etc. now. So that's very much part of our ethos. And then, of course, looking at the social part, how we treat our employees, how we develop them, that is really part of the social network, and it's very important to us as part of our mission.
I hope Manav has this going live, because that's going to affect your stock price upwards, yeah? Now, I think I think to each one of you, if you had to place a bold bet on one game-changing model or trend that will define our business by 2030, what's it going to be?
I think the flow of not model, but I think a trend that can clearly get a lot of more, see a lot of more positive in the hospitality sector is tourism. You largely look at a lot of the, the infra, the aspects where you want a lot of more, tourists to come into India and play that out. If you look at, I think, the split between foreign tourists versus the domestic tourism, etc., I think it would be in low teens, right? Like hardly a double digit, low teens foreign versus domestic. So a clear trend to focus that maybe, and I think the government's doing that, with the focus on infrastructure. We spoke earlier about getting into remote places where there are some beautiful locations and hotels, and focus on how the connectivity becomes important to get there. I think if this trend can scale up from here, and with a lot of focus on, like I said, infrastructure, even advertisement of some of these places, as some of the Indian brands effectively look at bringing in more, foreign tourists from outside. This is in addition to the medical tourism, because I think that's also something which, when you talk about hospital sector, you're seeing a clear growth after COVID in that arena as well. So tourism, a small component of that, medical tourism, this, as 2030, the scale up in this will clearly define a lot and show a lot of interest towards the Indian hospitality.
What?
Yeah, for me, I think over the next 5-7 years, I think what you will see is the increased institutionalization of the sector. Today, there is a lot of interest from the investors who want to go and deploy and own hotel assets in the country, but the markets are shallow. There's not that much to own, at least of scale. And if you put things together, if you put platforms together, their absolute value is greater than the sum of parts, right? Increasingly, I think the single asset owners or small asset owners will start appreciating this value, right? And how do you combine everything and put together as a platform where this entire platform becomes greater than sum of parts? So, and that as a platform becomes a lot more interesting for some of the institutional guys like us who want to deploy capital at scale. So I will say a large part of next 5-7 years, you will see, along with newer developments, a large part of this being focused on institutionalizing some of these smaller hotels put together into a platform.
So if you're looking forward 5 years, and if we really want to be truly a tourism-driven economy and get those foreign tourists and things, and I think there are two things. One is from the hospitality side. If we want to reach those and build those hotel rooms, there are many bottlenecks and hurdles, because if you want to put up a project, it just takes ages to get all the permissions into place. So, 5 years from now, are we going to go from 12 million to 30 million incoming tourists? It's not going to happen unless you get that. The other thing that worries me as a traveler myself in India is that many of our destinations are bursting to capacity already. So the visitor experience, what you see, the roads, all that network, the airplanes, all that is great. But how are we managing our sites? How are we managing our hill stations? That's a deterrent for, I think, too much of development sometimes also causes problems.
So I think better capacity management.
Yeah, and destination management.
Yeah, because I think in quite a few of the forums and even in some of the investment conversations that we have, one of the things is coming up more and more is over-tourism, but in key destinations.
Yes.
But this also is where the infrastructure comes in play, because these destinations had the infrastructure developed. So when everybody wanted to travel somewhere, these were the places, Goa being the perfect example of that. Yeah. Arun?
See, if you try to see what are the trends, experiential travel. People are not going to be happy with just traveling to a destination because you have a hotel room or you have a nice restaurant. They would like to have the full experience of the destination. So that is one thing that is very, very evident, that every segment of Indian market is seeking that. So I see that there are going to be a lot more developments happening. There are going to be entrepreneurs who are going to take risk and go and do this stuff. So the consolidation and all that, that's going to be happening parallelly. I do fully agree with Mohit and what my predecessors have said. But I would say that there is going to be a lot of risk-taking, a lot of new kind of developments that will happen in the country. Even the large corporations, even Indian hotels, if you see that they have gone into different segments and are willing to spread their resources into all different fields. So that's one trend. Second trend, obviously, I see is that India is going to grow economically, and there's an opportunity in hospitality is very, very big.
And I think for an import-based country, for oil and other aspects, Forex is very important. And the snapshot that we were talking about is grown in the last 5 years from 7 billion to 10
billion.
And I would love to see it in the next 5 to go to 20, if not more. Let's open it up for a few questions that are there. We have an app where you need to put your questions in. We have a few already here. No worries. You can go on the app. Yeah. So let's take the first one, which has come up. Why are turnkey projects not more popular? And what are the competencies of a hotel owner are distinct from those of a developer? Interesting. Priya?
What are the? I'm sorry, I don't have
So,
my glasses. What are the?
why are complete turnkey projects not more popular? So I would say this would be a turnkey project where we are, and why are these kind of master developments not happening? And what would you agree the core competencies of a hotel owner are very distinct from that of a hotel developer?
Is there a difference?
Yeah, that's what I'm thinking.
I mean, I'm an owner developer. So
Well, let me have a go
I
at
mean,
it.
what-
Okay,
what-
it's a
what a
confusing
developer.
question, but let me have a go at it. I think what the question is implying that as a developer, when you talk about a turnkey project, means you come in there and you find a contractor or somebody who will do everything from you, from doing the construction to finding the furniture manufacturer, everything. So that's the turnkey. I mean, the turnkey has in India got a bit, has a bad name because everybody thinks turnkey is very expensive. Actually, it may be turning out to be cheaper because the time it takes to coordinate 15 different suppliers and contractors is much, much painful and time consuming. So turnkey, the value of turnkey, which is understood in the Western society, economies, is still to come to India, but I think it's beginning to happen. So this is going to be definitely going to be happen. A hotel developer is the guy who builds a hotel, and a hotel owner is a guy who continues to own. So in India, we see most of our community of hotel developers are also converted into hotel owners. We don't see a developer building a hotel and selling out as soon as he builds it.
But
So-
I think that is a point of the transaction volumes going up here.
Yeah.
So once you see the value in those transactions and you see the value being developed in those transactions, a lot of them would start building and selling instead of keeping it with them. Something like, oh, this is a fun one. Third-party asset managers. Do you see value in the service and why? I think I should take this one.
You should. I haven't used
No,
it
but
yet. Have you
please.
used them? No. You say?
Well, I mean, my view is the third-party asset management companies have a space, but they still have to have a track record to prove to the hotel owner that they can do the job. Okay, so this is the jury is still out. But that definitely is a segment that is going to grow in India.
And if I can add on that, in very mature market, not mature markets, markets where they have seen asset managers, not third party, but owned asset managers do their job for the last 20, 30 years, third party asset management is now coming in. So I think you need that cycle to go in. Rooms have RevPAR. What is the right metric for F&B? Okay, we don't have hot stats. Mano, next year we need to get the guys from hot stats to look at this profitability. So you have different metrics in other markets. It's all subject to data. So if you have the collation of data, then you'll have those kind of methodologies. If you had a study,
No, that's not.
okay, if you study a hotel project on one page, what are the things that you need to see? Okay, the bankers.
I would say, again, it depends upon the hotel assets, like which stage of development or stabilization it is. If it's already a built asset, we would essentially want to look at the LTM performance in terms of the key metrics, whether it's occupancy, ADRs, GOPs, and EBITDAs, what's the debt profile like, and if there is any pending capex, which is due as of today, and if there is any kind of a next year budget which you've got from the operator. So that's for the completed hotels. If something is under construction, then probably like the timeline to completion, the pending costs, what's kind of what kind of financing has already been tied up, and what the market today looks like in terms of demand and supply.
I think the next one is, what are bankers doing to subsidize interest rates on hotel infrastructure projects?
No, the government gives a
The government gives it.
This is all-
No, but the hotel infrastructure projects like Blackstone or like they can help. I don't know if they're governed by the rules of the government. Obviously, correct, I can't do it. But the investors, they can always take a unique view.
I think if I have to put my investment hat on, everybody is governed by federal interest rates. No one is putting money out of their pocket to give anybody. So that is what, am I?
I would like to add here quickly, if you're looking for subsidy, don't do the project. Simple. It has to be viable.
Yeah.
A hotel project has to be viable on its own right and not
100%.
look for subsidies, or any project for that
Yeah,
matter.
100%. Okay, I think
Yeah, but
if you
government
can put
keeps on
whatever you want
changing
on the
those
app,
also, no? So you
I think
put
that would be better.
That's also happened.
What is the right amount of debt for a hotel project? Priya?
I mean, it depends on, not too much.
Not
I
too much.
think. Because it is a cyclical business. And
Agreed.
of course, there are good demand drivers,
Yeah.
but we've all been there
Yeah.
at some point in the last 30 years. And of course, it depends on your balance sheet.
And I think I go
So,
back to what
yeah.
Arun said. Your feasibility should be based on zero debt. And
Yeah.
if it works, then you kind of upsize the project and make it more and more viable, create higher IRRs by plugging in a bit of debt.
Yeah, some amount is good. Yeah.
Yeah, but debt is always good. It's not a bad thing as well. We have the last 2 minutes. Which qualities of project would motivate you to accept a lower return but still go forward? I think this goes by greenfield project, yeah, Arun? In greenfield projects, what would you look at?
You see, in a greenfield project should be no different than any other project because there's, return on equity, return on investment has to be a threshold for every kind of developer, owner, investor. So as long as it's meeting your own thresholds, yardsticks, that's where you make the decision.
100%.
And on this basis, I would basically, sometimes we do have a concept of social responsibility. We opened a nice hotel in Bodh Gaya last year, and that hotel is a branded Hyatt Place because there was no branded hotel and there was an international airport and a lot of people were willing to come there, but there was no. So that was a kind of a social responsibility kind of a project my father undertook. He said, I don't want a return on this. So these are special projects that will happen in every family, every developer. But as a yardstick, it has, it is.
And if I have to add...
Or something strategic, a strategic location.
Yeah, and I think from a pool of capital, from an investor perspective, there could be a different pool of capital that's looking at the project quality and not focusing on the same kind of opportunistic return. So if you have an iconic hotel in the middle of a gateway city, right, that probably will not go for a number where you can make opportunistic return out of this. So probably Blackstone will not be the most competitive out there, but you will have pools of capital who are just trying to probably solve for a hedge against inflation and are ready to pay up a little more for a lower return because whatever they're buying in is way below their replacement cost in terms of their going in basis, and they're almost irreplaceable as assets, right? So these are more iconic, like front of the book kind of assets, which you own for reasons outside of making opportunity cost of capital.
Absolutely.
I think, thank you for this. And if I have to kind of wrap it up, while our beautiful markets might be volatile in the last week or two, our sector is still very agile. And I think that becoming more experience driven is, you talk about the Kumbh Mela experience or be it a beautiful hotel in Chennai or Mumbai, I think that's what matters. The corridors that are being created by the Indian government globally, I think matters. And I think, let me put my UAE flag on with what happened in the last couple of days, it does matter. And what we look at the real estate side of it, the more resilience we build in. And to Arun's point, and what Priya also said is that we have to look at it as a pure equity model, and if it works, then you look at what happens around it. I think, thank you for everything, for a beautiful panel. Thank you.
Thank you so much.
Thanks a lot. Thank you.